Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, Washington, D.C. Metro, to Real Estate 360 Live. I'm your host, Ryan Soper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach us is the off-air phone number, which is 877-245-2030. That's 877-245-2030, or via the web at realestate360live.com. That's realestate360live.com. When you get there, on the right-hand side, there's an Ask a Question button. That's where the majority of listeners will go there, enter in your name, phone number, contact information, email, and I will be glad to answer any questions that you have, whether if it's regard to potentially short selling your home to avoid foreclosure, whether it's trying to get your credit back in line to buy a home, whether it's reviewing your financing options and you're looking for a good lender to work with. I can help you out with any of those things. And even if it's a question that I may not be able to know the answer to, I'll direct you to a person that can properly answer that question. Back to QE3 and the effects that it's going to have on our overall economy, or what I feel the effects are going to be. Louis, it's interesting. Donald Trump was actually asked what he thought about QE3, and he said, well, to be honest, I'm going to benefit from this. I'm one of the guys that's going to benefit from this, and it's not just Donald Trump. Steve Wynn, one of the richest guys out in Las Vegas that builds all the grand casinos out there, he's saying the same thing. Many of the rich, they know that by them continuing to print money, it's going to bode well for the rich because they can continue to buy up stocks, and these commodity prices are going to continue to rise, and they can capitalize on it.
People who live by borrowing other people's money, the lower that rate is, the better they're going to do. Yeah,
and there was a statistic that 82% of all individually held stocks are owned by the wealthiest 5% of all Americans. And what's been taking place over the last, couple years is we've seen a tremendous run-up in stocks. And, it's not the average everyday Joe that's able to put their money in the stock market, buy stocks, and have those prices rise over a period of time.
Well, it's clear now, Ryan, that the stock market is not an indicator of the health of the economy. The stock market is roaring.
It's absolutely roaring, but it's interesting, Louis, and I think that this is where just the average Joe out there, though, if he picks up the newspaper, he looks at it, he looks at the Dow, looks at everything else, he'll just say to himself, well, you know what? I guess it's not so bad out there. You know what I mean? They may have a job that they're getting paid. They're just barely getting by. And the national media, all the information that they're putting out there, and the way they continue to say that with what Bernanke's doing is going to help us solve our economic problems. They really just don't understand that this is going to be completely detrimental.
Yeah, I think they're looking at the stock market, but more they're looking at if this somehow increases the value of their homes, then they think things are getting better. If they see the nominal value of home prices rise because credit is lower and if they loosen the credit standards and people can buy houses, then people think the economy is coming back. What they don't realize is that their house is still their house.
Yep.
And the value of it is only determined by the market. If the market deems their house is worth less, it's worth less. But if somehow the Fed can tell the market it should be worth more because there's more money available to go and buy it, then I guess people think that the trick has worked on them, that somehow they feel wealthier, that their house is worth more. It's not worth more. It's not producing any more income. It's still the same old asset. There's just more money allowed to chase that particular value. So that's where the trick is. And then, of course, it does help the stock market. And if people do have money that they make in the stock market or they see their 401k plan up, they may feel wealthier. But the concept of making people feel good so that they spend money either that they don't have or borrowing it is not the basis of a sound economy. It has to come from people working, having jobs, saving money, and then investing that money wisely in activities that are going to help the economy and also provide a return to the person who invested the money.
You're listening.
That concept is out the window right now.
You're listening to Real Estate 360 Live. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the general manager of HomeGain. You know, Louis, it's interesting to me because a lot of the questions that I field from clients or just, listeners that are either calling or emailing in is that, it seems like things are getting better. I mean, house values are going up. My neighbor up the street just sold their house for $300, and, 6 months ago it was $270. So it looks like things are really turning around. And, do you think that, we're going to continue to have these gains? And I can't answer those questions, but what I have seen in the D.C. metro area is that this artificially low interest rate environment, and let me say that again, artificially low interest rate environment is really putting upward pressure on prices right now, especially in the D.C. metro area because inventory is really low. Now, guys, you have to remember that in the real estate game, it's a basic supply and demand equation here. The less amount of supply that we have, it's going to naturally drive up prices. Now, when you couple that with this artificially low interest rate environment, we in the DC metro area have a surplus of financially willing and able buyers. Okay, where the rest of the country, certain areas, they don't have the same stable employment situation that many do here in the DC metro area. So we're seeing more of an appreciation of home prices here, and I feel like the optimism amongst people that own homes right now and looking at their home prices going up, they tend to, that's some sort of reflection back to where they feel like that, Bernanke's doing them some sort of good. Would you agree with that, Louis?
I agree with that concept. And also, the policy is flawed not just in the concept and giving the power to the Fed to print money, but somehow that our economy, the United States economy, should be based on people moving in and out of homes, existing homes. That doesn't really create any value or any wealth. It's essential that people move into homes, but it shouldn't be the driver of an economy. An economy should be driven by the production of goods and services, not by people moving in and out of homes and the value of those homes that they move in and out of.
Agreed. But the irony of the situation is that, basically when we were on the verge of financial collapse, most to do with the housing bust, it's almost like they're promoting the same thing that caused the mess to begin with.
Oh, absolutely what they're doing. He even said as such, that basically he wanted to create a wealth effect where people feel their homes are worth more and stocks are rising. And that'll make them go out and spend. That doesn't fix the economy. That makes people feel good. No different than an illicit drug makes you feel good for a while, but it doesn't solve your underlying issues as either why you have the pain or why you don't feel good. Yeah, it only makes it worse when you have the hangover.
I feel Peter Schiff had a proper comment that this is a disastrous monetary policy. It's kamakzi monetary policy, and it really is. It's scary to feel to know that. I mean, especially they did this prior heading into this election that they chose to pull the trigger now. I'm very curious to see how things play out over the next 4 or 5 months. And, I'm really curious to see what happens in a traditionally slower real estate market, which would be in the winter, Louis.
Right.
I want to see what actually happens with the amount of buyers that are out there that are going to, maybe come out and still try to take advantage of these low interest rates into the winter season. Obviously, I've seen in the D.C. metro area, Northern Virginia, that, homes are flying off the shelves at certain price ranges right now. I mean, you can't keep them on the market for a week most of the time before they're under contract. And these are even properties that aren't even necessarily that nice on the inside. So I think it'll be pretty telling to see what we see the real estate market do as we head into these winter months.
And Ryan, we both predicted that the Fed would wait, but in a sense, we were wrong in the timing. But we were right because of the way the Fed set this up. What they announced was QE to infinity, and we thought they would wait till after the election. What they announced is only what we know about. Right. In other words, what could happen if there is – we thought they might wait for some type of fiscal cliff to occur. If that does occur, they've already opened up and said we're going to do whatever, whenever, and as much as we like.
Yeah.
So this was just the announcement that they're going to start now, but it's not like prior announcements. They said we're going to buy $600 billion worth of treasuries, $600 billion worth of mortgage-backed securities. All they said was, we're starting now, we're going to start with 40, 80 billion, however you want to read the language, of mortgage-backed securities. But that doesn't mean that they're not going to do more.
Oh, they've completely opened up the purse. So, I mean, if we reach the point where, I believe that there was some rating agency that just downgraded U.S. debt to, I want to say it was AA-.
I never heard of that one. Is that one that's authorized by the U.S.?
You know, I'm not familiar, and I need to investigate that a little bit further because it was the first one that I've seen, and it didn't.
I saw that, and Moody's made a warning, but they didn't downgrade.
Yeah, it was Eagan Jones.
Eagan Jones, I don't know that one.
Yeah, they downgraded credit rating of United States to AA- on Friday. But you know what? It makes sense that I would have thought that they would have already have done this prior to this QE3. I mean, the financial situation in the United States is not getting better. And the more money that we print, it's getting worse. But they make a great point in a lot of the articles that I've been reading that it's, okay, now that they've opened up the purse, and even if Congress continues to push us off this fiscal cliff, who's going to be the buyer of the continuous debt that we have? It's just going to be the Fed. They're going to continue to buy and buy and buy. They're going to have to, ramp up instead of, like we said, up to $85 billion at some point in the future. It could be up to $1 trillion a month.
But isn't it odd that investors take solace in the fact that the Fed will backstop their purchase of treasuries, and they take solace in the fact of Greenspan's comments that if we'll never default on our debt because we can always print up the difference? Yeah,
it is. It's amazing. And it's amazing because you would think that there would be somebody smart out there that would shout from the mountaintops and say, that, hey, this is disastrous. I mean,
there are people, as you mentioned. Peter Schiff is saying that. People are saying that with where they move their money. Soros has moved money into gold and out of financial institutions. Paulson has doubled down his bet on gold. There are people who are moving out of U.S. dollar-denominated assets as a result of this. Oh, and the guy, Bill Gross at Pimco, he sold a lot of his bonds as well. So money is moving away from the dollar, but in general, the U.S. Treasuries are deemed to be the safe haven.
Yeah, and I do feel like a lot of those people that you just mentioned, too, this is not stuff that's getting thrown out there on your nightly news. You know what I mean? They're not telling you about what the rich are actually, how they feel about this and what they're doing. So,
Well, they try to make people like Ron Paul, Peter Schiff be kooky because they want to return to a gold standard, or they recommend that you have money in gold and silver and that gold and silver are honest money. They make fun of that.
Yeah, I mean, who wants honest money, right? I mean, this doesn't make any sense, but we're coming.
Money's better.
It definitely is, and we as the United States and the Fed, they just can't seem to get their arms around that. We're up on a break. When we come back, more with QE3 and what you can do to protect yourself. When we come back, stay right there.